My response, I saw your message. I sent a response. I hope you got it. Cool. I love that trade. And man, I really think, Cav, you're gonna dig what we're talking about today. Because it's everything that we talk about, but there's a little bit of different language that's going to be used. And just sitting with my brother yesterday, we studied for 8 hours straight, taking pictures, talking about patterns, trying to go back and forth to make this as easy as possible. So, guys, one of the things that I really want from you today is a lot of feedback. I want you guys to talk to me about what makes sense and maybe what needs to be reworded. And I like come at this from the point of the most basic student, right? So Arturo, you have the greatest advantage today because you're brand new. So even if it's private, if you don't want to do it publicly, guys, I'm looking for feedback on the information today. My brother and I wrote a PDF yesterday. We created this, what I think is outstanding. It should put me out of a job. It won't, but it should. It should be that good. I'm so excited about it. Excited to share it. But before we do anything, guys, let's do news, right? There is no news. Today's President's Day. We're the only silly people working in the wonderful world of markets. But every morning I do come to forexfactory.com and I look at the calendar. And I just look to see where there's stuff going on, right? So even tomorrow, there's really nothing going on. Wednesday, though, FOMC meeting minutes at 2 o'clock, fireworks for hours usually, or at least 10 minutes. But what I'm looking for every day is I'm looking for these news releases, these high impact, these low impact, because guys, we don't move the market. There's people with a lot of money that do that. And the reality is they do trade news releases and they wait for news releases so that they can trade the reaction. It's like trading places with the orange juice crop reports, right? They're waiting to see if the crops were good, if the crops were bad, and then make their trading decisions based on that. There's a lot of people that do that in the real world. So when we see high impact, when we see medium impact, it works out pretty well that we can just avoid that emotion. It's great to have you, Arturo. And staying away from that emotion is huge. It's so key. And then everything that I talk about, guys, and it's actually twofold this time. Everything that you need, you can find in the tutorial section. Everything that you could ever hope for is in the tutorial section. You can find the rules, you can find the looks, you can find everything. Right here, click the tutorial section. It's good. But today we're going to do it a little different, guys. I'm not going to reference this one. What I am going to reference, and I'm not sure if John put it in here, I'll give you guys the link. Um, we rebuilt everything, and we're going to talk about it. And we're going to talk about it in depth. And guys, I really want you asking a lot of questions today, if you don't mind. It would help me a lot as we go through this new material. Um, But welcome, right? This guide is designed to teach you the basic chart patterns. It will enable you to make confident winning trades as quickly as possible. John Novak, get out of my room. You've got your own room. It's funny. My brother is 20 feet away from me. I could just yell at him, but I'll do it digitally. Guys, we're going to talk about chart reading, the three skills that we're going to help you master. And these are the three skills that are so important. We're going to talk about chart reading because it plays a pivotal role in the market, guys. 90% of the overall process is chart reading. 10% is really getting into the trades. So when you become a chart reader, and that's really what we're going to focus on, you're going to understand the key stuff like where the market is likely to continue and be able to use that for entries. Where the market is likely to go is going to give you opportunities to capitalize on these entries at the correct spots. And then where the market is likely to stop, those termination conditions. And this really is the basis for trade entry and management. We're going to talk about trade entry precision. We're going to talk about the rules. We're going to get you in to continue the trend. You're going to understand where it's going. And then we're also going to talk about trade management to increase a little bit better. And guys, one of the cool things about this PDF that we're doing is, so Arturo, this is great for you, but here's the first video, and this is the trigger line video, and this is what we're going to talk about. And I'm just going to go through the whole PDF. But before I do that, I'm going to do this one, the one that you guys have all heard a million times, right? What's your path to getting to where you want to be? How do I get to be a confident trader ASAP? Guys, post in the room. Let me see where this opens up real quick. Gary posted in the room, and Gary said, "Hey, Mark, check it out. Something went wrong." So I'm going to click on it again. Gary posted in the room, and what Gary did is he said, "Hey, check it out, Mark. There's a pivot from space and a second divergence, which means things are likely to push down a little bit, and I'm going to try and take advantage of it and catch just a little bit of a move to the downside." And he talks about what he sees, and he talks about why he's doing it, and he talks about where his entry is. And Gary, it's a beautiful trade, man, and you take it right to the point where the market may stop, right at that mid band from the pivot from space. Absolutely beautiful short using the chart read to capitalize. And guys, that's exactly what we're going to do today. So Gary, rock star start, man. Nice job. Um, we're going to get you guys to where you can do that. But the thing that you guys don't know about Gary is Gary just put in an awesome looking winning trade, right? Gary spent a year with me, and he's posted in the room, and he's asked questions, and he keeps seeking to know more. And guys, that's one of the greatest things that you can do is post your trades in class. Make sure that every time you do something, you drop it in the room, and you tell me why you did what you did, because my job is to help you read the indicators. My job is to make it to where you can make good decisions based on what the indicators are telling you. Show me where you entered. Maybe we can find a better one. Show me where you got out. Maybe we can find a better one. But the idea is every time you post in the room, guys, you're getting a private session with me. Um, and the private session is designed to make you a better chart reader. It's not designed to ridicule or shame. And I'm not here to tell you, oh my gosh, I can't believe you broke a rule. Go run a lap. Although I might tell you to run a lap every now and then. But the idea is that when you post in the room, guys, we're going to talk about everything, and we're going to confirm that you're understanding the rules, that you're understanding the reads, and then track your real time, track your trades in a performance sheet in the performance spreadsheet. Gosh, I'm struggling to talk right now. And the spreadsheet's given to you by Nexgen when you download it. So Arturo, you'll find it in your Nexgen study picks. But honestly, man, I'll share mine, right? And this is mine right here. I'll drop it in the room for you. I haven't used my laptop in a few weeks, so you guys are going to see me dragging things across the screen. But the spreadsheet's got three different pages, guys, and the first one's your copy of your tracking. Every time you take a trade, man, no pressure. I got the boss standing behind me.
You're gonna have to put them on hold for just a
Oh,
second.
all right, guys, hold on just 1 second. John needs me. Just 1 second.
So look, go to your internet real quick.
All right, guys. Sorry about that. My IT guy just came in. My brother's like, dude, you are not hooked up to the fast internet back here. So he got me on the fast internet, which is good because I've been disconnected like 4 times today. So back to what we're doing, guys. This spreadsheet, and I just dropped it in the room for you. The first page, this is your trade journal, guys. And every time you take a trade, drop it in here. It's going to ask you how you felt and what you saw and what it was doing. But the cool thing is this trade journal. Man, this is it. This is the one because if you come back and you study it every morning. So as you traded Friday and you started to fill out the spreadsheet, maybe you had 10 trades, maybe you had 50 trades because it was just one of those days. Come back and look at them and what are the common threads, right? Maybe you were trading without momentum, or maybe you were trading into areas, or maybe you were getting in early or getting in late. What happens is when you come back and you study what you did yesterday is it sets you up for today, right? So today I'm going to make sure that I always trade with momentum because on Friday I didn't. Today I'm not going to trade into termination conditions. I've got a big note with green crayon on my desk that says, hey, don't trade into termination conditions because that's what didn't work. And then what worked, I'm gonna say I'm gonna trade with momentum. I'm gonna trade with a clear path, and that got me where I needed to be. And you'll find that there's a correlation between what's easy and what feels forced, and your ability to embrace the advantages that the software gives. In this brief historical study each morning, it will prepare you for the day. It will accelerate the learning, and there's no doubt in my mind, and I say that with complete conviction because I've watched it work for anybody and everybody that's embraced the path. So post in the room as much as you can. Always tell me why. Mark, this is why I did what I did. There's no wrong answers, but I need to know what you're seeing to make sure that you're reading it correctly. Use that spreadsheet. And then we're going to go through, guys, we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. But we're not just going to learn the rules today. We're breaking it down individually into the parts. This new PDF that we're going to work off of today, guys, it is literally from step one to the end of the road. And we're not just doing high probability trend trades. We're literally going to talk about all the trades that Nexgen teaches and how these very simple looks work their way into being able to catch more. So you build a foundation with the simplicity, and it takes you to where you want to be. Simulate, practice, get out there, break some eggs, right? Make some mistakes. I always relate trading to being like working out. And when you're really trying to get big and bad and buff, the phrase to failure comes into play, right? Work out to failure, live to failure, which means that you literally you find your trouble spot and you try to go screaming past it because if not, you don't know where your trouble spots are. But whenever you make those mistakes, when you go beyond your capabilities, let's say you run out of talent mid-trade, what it does is it gets your brain focused on how you correct. So when you do that, when you take trades and you make mistakes and you talk through them, what happens is you're less inclined to make those mistakes next time. We want you focused on the correct trades because the correct trades provide an advantage. We're going to simplify, guys, very much. We're going to keep it very basic and then work off of that foundation. And you want to know what looks you'll commit to, right? And you've got to look at them so they're easy. And that's where the spreadsheet comes in again. I've got about 300 pictures of clients using the software, taking advantage of the things that we teach. I've got entry sequences for longs and shorts. I've got very basic management. There's a whole section dedicated to NASDAQ. There's a lot on the patterns that just repeat themselves, things that you're going to see in every market every day. And then a lot on those termination conditions where the market is likely to stop. This third tab is where I've done an awful lot of work to give you guys kind of a basis to grow off of. The users that will get where they want to be the fastest will make the second tab look like my tab. They will fill out the personal trade setups list, the best of the best. What's it going to take to get you into the market? As you focus on management, as you get feedback in the room on exits and entries, you can put those in management, the patterns that repeat themselves, also terminations. Guys, really take advantage of having the spreadsheet. Fill that thing up. And the people that take the most pictures tend to get to where they want to be the most, especially when they post them in the room. But if you do simply 15 pictures a day, and one of you guys gave me the brilliant idea on how to do this, is take 5 pictures a day of the momentum look, and take 5 pictures a day of the terminations that we don't want to trade into, and then take 5 pictures a day of entries. What you're doing is you have like 75 pictures at the end of the week that you can go back and study, that you can fill your spreadsheet with. So take a lot of pictures, guys, and use that market replay as well. That you can double your reps. The only thing that I can't give you is experience. So we're going to use market replay to build your experience. And we're just going to go without further ado, guys. Remember, all of the things I'm talking about, most of it was stolen right here out of the tutorial section. But we're going to use this, and let me give you guys the link again if you want to follow along. If you want to turn, I think what I'm going to do is I'm going to take every picture from this eventually and I'm going to put it into the spreadsheet. But I want to just talk about it, guys. So the first thing that this asks you to do is watch the T3 trigger video. And this T3 trigger video is outstanding. It's only 11 minutes. You can run it at twice speed. But what it does is it just talks about what it is we're looking for in the trigger lines. It's my brother going through, and I just closed it out. I didn't mean to do that. So follow those links and go sequential. Um, Come on, new user, software training document. And it's funny because we went back and we changed this thing 100 times while we were doing it. Um, if you were a fly on the wall, you saw the Novak brothers fighting over verbiage. Um, we went full sibling without a doubt. All right, come on up. Once this comes up, man, it's really slow, isn't it? Maybe that PDF goes faster. There we go. We'll use this one while the other one comes up, guys. So we're going to talk about price bar location. And I really want the one where I can blow it up a little bit. It must be that fast internet, I know, right? Let's see if it'll let me just kind of reload it. That's okay. I'm going to make this bigger, and we're going to talk about these concepts, guys. And this is where it's a little bit different than what you're used to if you're used to this class. Price bar location, guys. This is kind of a new thing. You're going to recognize price bars above trigger lines. You're going to recognize price bars inside of the trigger lines, and you're going to recognize price bars. And that location has a lot to do with momentum. And we're going to talk about momentum phases, and that's one of the things that we're going to do. And let me scroll up just a second. I'm trying to get it so I can see everything. And at the time of entry, price bars are either going to be located above or below the small triggers after the market makes a top or bottom, or price bars are going to be located above or below the large triggers when doing trend trades. So what you're going to find, guys, is there's going to be two momentum phases. There's going to be a momentum phase, and remember, momentum leads everything. Momentum is what we're looking for. There's a momentum phase on the small triggers, and from good tops and bottoms, you're going to find your first shot before those large triggers roll. So, Cav, this is a great one for you. I actually thought about this when we were doing it. And then you're going to have the momentum phase on the large triggers, which is that best look for trend trades before they come inside. And it's really going to be cyclical throughout the day, guys. You're going to have momentum phase on the large triggers. This is your trend trade look. This is when it is most advantageous with those strong triggers to sell a pullback at Fibonacci resistance, or when you have that best of the best look, buying a pullback at Fibonacci support. But I want you guys, even without the small triggers, to recognize the bar relationship to the large. This is your momentum phase. When your triggers are down and the bars are outside, this is a momentum phase. When the triggers are up and the bars are outside, this is a momentum phase. And whether it is the momentum phase on the small triggers or it is the momentum phase on the large triggers, the verbiage is going to be the same. And you're going to hear this a lot in the room now. In the large trigger momentum phase, this is the best look for when we're doing those trend trades, that high probability trend trade that we talk about. And then when we talk about just what we're doing, guys, trading consistently, give me the right look. It's 100% consistent trigger line momentum patterns before an entry. And that's the key, is making sure that you have momentum. The first rule for the high probability trend trade, let me go back to it because I think that we should include this, is going to be strong trigger lines. It's going to be that momentum, that momentum that's created from the strong trigger lines. And when you have strong trigger lines, we're just going to buy a pullback at support. And it's really that simple. Every trade that we teach is a momentum trade. Your high probability trend trade is momentum on the large chart and an entry on the small chart. The actual HVA trade is that small trigger momentum on the large chart and a pullback on the small chart. And those momentum trades that you guys love so much are just momentum on the small chart and then capitalizing at the areas. So it's going to be let it be strong, buy a pullback, get to the next level, right? And then on the same thing going the other direction. 100% momentum leads the way, and when you have strong momentum down, sell a pullback right at an area. We're going to teach you how to pinpoint that area and then look for the next target. So the Pro Trader, guys, it's a tool that utilizes Fibonacci analysis to establish crucial support and resistance levels in the market. And I guess the easiest way to say that is you always hear buy low and sell high. Congratulations, you now know where high and low have the potential to be. The ratios and levels create a roadmap for traders, guiding them to their entries and exits. Each trade executed towards a Fibonacci area or initiated from a Fibonacci area after it successfully holds its support or resistance. So guys, this is an awesome video too. So this is your homework this afternoon since we're going to have such a short class. Go through and watch the video on how the fibs come to be and how we use them. And this is going to introduce the concepts one another, but it's really pretty simple. The idea is that if an area breaks and all the triggers are down and we're in that good phase, let's sell a pullback, and that becomes your short trade. And when everything is strong going up, we're going to buy a pullback. And this is the basis of everything we do, every trade that we teach, is strong trigger lines. Strong trigger lines set you in a position. We're going to call it odds favorable momentum, guys. Odds favorable momentum from strong trigger lines is the first advantage that you give yourself. And the look's pretty easy. And let's see if my stuff is up. We'll go back to the charts. That's the S&P. I'm not sure if I have any other markets up. I do have the NASDAQ. So strong trigger lines are just that separation between the small and the large. And you'll notice, and let's use that new language, the momentum phase of the large chart, or the large triggers, where the bars are outside of the large triggers. And guys, there's your tail. That's a pullback on a smaller, faster chart. This is where you're going to pinpoint your entries, guys. And that is an absolutely beautiful entry to take this market to the upside. And when everything is screaming down, you're going to see the exact same look go in the other direction. You're going to see these tails when you're in the momentum phase, guys, and these become your entries for the highest probability trend trades. So one of the ways that we're going to study is when I am in the momentum phase to the large triggers and I see a tail, I'm going to circle it. Is everybody good with this first concept? The separation here. Smalls outside of the large, bars outside of the large. This is the best of the best, guys. This is your momentum phase. This is your strong trigger look. And I think that maybe I'm going to incorporate, because change freaks me out a little bit, what it looks like when we're looking for that high probability trend trade is the separation between the small and the large, guys. It is the separation. Awesome. And you'll notice that the bars are outside. The bars are outside. So that's the new incorporation for you guys, is looking at that bar location versus the large triggers. When they're outside, it's the momentum phase of the move up. When the small triggers are outside of the large, that's the universal sign for momentum. And you see it go in both directions. And you'll see these tails print when the momentum is its strongest. So great examples coming through NASDAQ right now, even in a slower moving market. And then let me see where I was. This one loaded up, so we will bump it up a little bit. And guys, remember, this is my first time teaching from the PDF. Interrupt me if I'm not clear. Interrupt me if it's not giving you what you need. Um, and one of the concepts that's introduced in the video, guys, when you go through, is strong triggers may break Fibonacci areas. And there's no reason to look for trades in the opposite direction if you have that strong look. It's telling you don't fight momentum. And this look will allow you to hold on to longer positions, because strong triggers can break fibs, guys. When you have that great look, when you have that momentum, that's when areas break. And it's such a key look. And you'll see it. Strong triggers break Fibonacci. Strong triggers can break Fibonacci. Um, so we are identifying these areas. And then we're understanding as well that when Fibonacci holds, we can start looking for short trades. There's your momentum phase. So when this termination reverses the market, that's a strong top. And then notice how the market comes into that momentum phase, and there's your tail. And that's what we're working on right now, guys, is identifying that tail. Once again, strong triggers breaks the area. And then with everything down, it pulls back to that area. And this begins to be where we're looking for those entries, letting areas break, having that clear path, and getting to where we need to be. And then that should be the segue taking us to rule number 2. Termination conditions aren't true, or need to be false. And if termination conditions are false, guys, we have rooms to the target. We have room to make money, and that's the key, right? Everybody wants to get paid. So strong triggers, do I have that picture up anymore? Nope. All right. Strong triggers simply means that we're in the momentum phase, that the small are outside of the large, that the large are wide, that they're up, the separation between the two, the bars are outside. This is rule number one, guys, and it's a life cycle. The momentum phase starts, the triggers come back, it's ending. You'll notice that as the small triggers return to the large, so do the bars. So this is one of the looks, right? We will, Ron. We're going to get there. But we're literally going to go through and try and build up to it. Um, it's funny. I did that to my brother yesterday. I was like, but what about? He goes, dude, just work on it. Um, so this one is straight from the user guide. The idea on termination conditions, guys, the idea on making sure that you have room to your target, it's a two-part process. It really is. And let me read what it says. Here's the link to the user guide, right? So I'm going to try and follow these links and show you what it's doing. The link from the PDF takes you straight to the tops and bottoms section, guys, straight to the termination conditions section. An example of the termination condition from the guide is when price reaches Fibonacci support in this picture. And at this time, you have to compare strength and location of your trigger lines versus the Fibonacci area. If the triggers are not below support, and if they are weak, then you have to stop taking short trades. So we're doing a combination, trigger line location as well as strength. Notice that we're no longer in the momentum phase as we approach the area. There's a weakness. Weak triggers typically don't break areas. Strong triggers typically can. And we reach the area, and the area isn't broken with those triggers. The triggers can't get below it, and all we're doing is we're saying no more short trades. And let me go ahead and give you guys this picture too. These are the areas that we're looking for. On your large chart, on that big chart, guys, we're looking for fibs, we're looking for mid bands, we're looking for yellow one-to-ones, we're looking for resistance and support because these are areas where decisions are made. These are areas where the people that move the market are deciding to enter, they're deciding to take profits. This is where buyers buy and sellers sell. And what you'll find is that those weak triggers at an area, the area is more likely to hold. And if the triggers remain above the area is more likely to hold. And if that area is, in fact, more likely to hold, well, then you no longer have a clear path, guys, and rule number two isn't met. And this is such an important concept because this is probably one of the biggest broken rules out there. People love to hope that an area will break. And the recipe is pretty simple. So here it is too. The same is true at Fibonacci resistance. Price reaches the area with weak triggers, there's just no reason to even consider. And this is what we call a pivot stop out. If it reaches a divergence high, price trades above and back below, that is a 100% no more long trades. That is a area that may stop the market. And if it stops the market and reverses it, I want you to see something pretty cool. From this termination, we go straight to the momentum phase, right? Strong triggers. And then with those strong triggers, there's one of those little pullbacks at resistance. And since the bottom of the bar, since price hasn't reached support, the path is also clear. And guys, this is what we're looking for right now, is we're looking for that best of the best, but we're piecing it together slowly and methodically, making sure that we have the momentum and making sure that the path is clear. And then we're going to figure out how to pinpoint those entries. Price reach yellow one-to-ones and the triggers don't break, right? They're beginning to weaken. They're losing the momentum phase. They hit the yellow one-to-ones. And sure enough, that's what creates the fight. And I want you guys to see this too, because here the triggers are very much in the momentum phase, right? The bars are outside of the large, and notice that Fibonacci breaks. The same is true over here. In that momentum phase, the areas are more likely to break. So I want you guys to start talking to yourself and use the phrase momentum phase, because for me, it's really changed the way I look at the market. And then price reaches, right? None of the triggers break. And then they go to resistance and none of the triggers break, guys. And this is 90% of your day. But ultimately, you'll notice that we get a momentum phase, that the path is clear, and there's one of your tails. And we're going to talk about those and how to gauge those entries. And I'm not going to talk about one-to-one dots, but we're going to talk about one more potential termination condition and three divergences on the small chart, or even a second higher divergence. Guys, this may cause a termination of the trend. So there's a new concept for you guys. Three divergences on the same price range may terminate the trend. I wish there was a way to open these and make them bigger. Three terminations, or three divergences in the same price range may terminate the trend, guys. You'll see three at a low, you'll see three at a high, and this will help you see when the market may be turning the other direction. This is a very powerful condition when the third divergence has weak triggers. Remember that momentum phase. When the small triggers get back inside of the large triggers, when the bars get back inside, we've lost that momentum. We're in that anything can happen look. And sure enough, it creates a powerful opportunity for the market to go the other direction. It also becomes powerful if that third divergence is higher than the previous from a low or lower than the previous from a high. It creates this head and shoulders pattern. And then the new addition, once again for you guys, I'm going to talk about it, is if the market is moving down and your path is not clear. Sometimes two divergences, if the second is higher, can be enough to reverse that market or push you beyond the best entry. And the same thing is true over here. Two divergences, if the second is lower, can be enough to push you that opposite direction as well. You're going to see this look more often when the path isn't quite clear, when the small triggers haven't made it through the area. But this is another termination, but this is a small chart termination. I feel so out of focus today doing something new. I'm very much into systems and routines, guys. So now we're going to take what we learned. So let's talk about it and make sure that we're good because we're going to turn these into a trade, guys. The large chart says strong trigger lines. The large chart says that we have momentum. We're in that momentum phase. The bars and the small triggers are outside of the large triggers. Can you give me a Y in the room if you're good with me on that one? I'm going to bring up a picture just to do it visually real quick to make sure that you're comfortable. It's the separation between smalls and large. It's the bars outside of the large triggers, guys. This is the best of the best. This is the one that breaks areas. This is the one that continues in the direction of the market. And this is the one where we're going to buy support or sell resistance. I love it. And now we have to make sure that we have a clear path. We have to make sure that we haven't reached an area that may stop the market. So I'm going to go into my little bag of tricks over here and we're going to take a look at it. Um, Termination conditions at a high. Price reaches that divergence high. Notice that it's weak triggers. This is likely to reverse the market, guys. This is no more long trades. Price reaches resistance even with strength. No more long trades. Price reaches one-to-ones and resistance, weakened triggers. No more long trades, guys. And it's pretty consistent about across the board every day. That's what they look like when you reach a high, and of course, it's going to be the same at a low. Price reaches the area, the decision-making process begins, and if all the triggers remain above, the area may create a bounce, and if they're weak, it's more likely to reverse. And guys, that's one of the things that I want you to take from this one. Strong into the area may create a bounce, weak into the area, more likely to reverse. But if none of the triggers break, we're simply not looking for that next short trade, guys. Um, Termination conditions give us room to the profit targets. So now we're going to look at trade one. Um, Call it trade one because this is the easiest, guys. This is the trade that teaches you to be a chart reader. This is the trade that gets you to where you can just open up your software and look at it and understand. And let's go to the live market real quick. This is the NASDAQ. Um, Momentum phase breaks the area. There's your pullback, and it goes straight to the area. Now we're weakening a little bit, but the smalls are still outside. And look at the bottom of your bar right here. Coincides with an area on the smaller, faster chart. Whoops. I think I have another workspace open. Not in the momentum phase, a lot of weakness, and it just reached resistance. Does everybody see? No more long trades. Not in the moment, because we've reached an area that may stop the market. Price reaches support, triggers remain above. Open up S&P. No short trades. Price reaches support and a divergence low. The triggers don't break. They're weak. That sets off the reversal. Guys, look at that momentum, and there's your tail. This is pretty much every lesson in one picture. So your job, ladies and gentlemen, is to take a picture. and start using the language, right? I'm going to give you guys, this is how I study. This is one of my 5 for termination. Price reaches support and divergence low. Triggers weak and above. No more shorts. Termination condition. Does everybody understand the language? Because I think that the language is important because what you're doing is you're reminding yourself that price reached the area, right? So this is your first picture, guys. You're going to take 5 pictures of each a day. And we'll make this one all about termination conditions. So I've got 2 arrows, 2 conditions. The exact same rules are met, and I know that I'm not going long, and I know that I'm not going short. So let me put no more longs here because obviously it's not no more shorts. And then we're going to take this picture, and here's one of the other ones that you can go back and say smalls outside of large, strong triggers, or you can say bars outside of large, momentum phase. Tail is a pullback on smaller chart, potential area for entry. So what we're doing is we're going through, and guys, I'm telling you right now, if you take these pictures and you put them, upload them to Screencast, and you just go to this one right here in your section. Whoops. You can turn it into the hyperlink and just say textbook termination condition, right? So what we've done is we've taken that picture, 3 minutes of our life. Hey, good morning, chef. And now we're a little bit better at termination conditions. We've used the language so that we can recognize them in the moment, so that when we're watching the live market, we can say price reached resistance, the triggers are weak below. This is an area that's likely to stop the market. This is the textbook termination. So we have to wait for it to break or for the market to roll. Price had momentum into the key Fibonacci area. This area may break. And sure enough, it did. And there's one of those pullbacks. And there's a potential entry. And there's pretty good look at some profits. So we're going to go through and let's go through turning these advantages into a trade, guys. So everything starts with tops and bottoms and triggers. Rule number 1 is a good top or bottom, which means that we've got a reversal or a breakout of Fibonacci. But as long as the trigger lines are strong and favorable momentum phase, you're going to look for the trend trade. So the trigger lines need to be strong, and that's exactly what this is telling you here. And if it's coming from a reversal, it's even better. If it's a termination condition that reversed the market, it adds a little fuel to the fire. Because remember, decisions are made down here. And the decision was that support is going to hold. And from support, it started pushing the market up. Rule number 2 says no termination conditions using the large chart, making sure that you're not trading into an area, making sure that you have room to make some money. And then finally, rule number 3, guys, says that we're going to use a limit order. And I'm going to go to this one because I've simplified it a little bit. Rule number 3 says that we're going to use a limit order to buy or sell a pullback on a smaller, faster chart. And we're going to have that limit order at an area, fibs, mid-bands, yellow 1-to-1s. And those areas are going to be inside of the triggers, guys. And the tighter the triggers are on top of each other, the easier the entry becomes. So what we're doing is we're incorporating a 2-chart process. We're using the large chart to define the direction of the market. We're using a large chart to define the momentum in the market, looking for that best of the best strong trigger look. And we're using the large chart to define the areas that may be problematic, the areas that may create a bounce, the areas that may stop the market cold in its tracks. And then we're going to go to the smaller, faster chart when the rules are met, when we have momentum, when our path is clear. And on the smaller, faster chart, we're simply going to look for an entry to area, an area to enter at. The way we use the lines on the large chart, we're going to use lines on the small chart as a bounce point for continuation of the trend. And we do this by using a limit order to buy or sell a pullback. And a pullback means that the market shoves against everything that's going up. It gives us this little retracement. And our retracement needs to come back to an area, fibs, midbands, yellow one-to-ones. And we want those areas to be inside of triggers. And I think that this is one of the lessons that I'm going to give you the new user safety net. There's two sets of triggers on your small chart. There's the large triggers, and you'll notice that these create the exact same momentum phase look. Smooth, small, large, there's momentum. But there's also the synthetic triggers, and the synthetic triggers are these step triggers. These are nothing more than the large triggers from the large chart. What happens is when the large and the synthetic are overlapping, one on top of the other, it creates the absolute smallest amount of space for fibs, midbands, yellow one-to-ones to be inside of them, which means that as you come into these trades, you're going to have even less risk. You're going to be able to pinpoint with even more accuracy where the market is most likely to continue. So we're going to use this idea of favorable large triggers, and you'll understand as you grow that there may be trades that only come from inside of the large or only come from inside of the synthetic. But as a brand new user, let's keep those areas inside of favorable large triggers, large and synthetic one on top of the other. And what this does is rule number 3 defines where the market is most likely to continue. So we're going to go through, and the tops and bottoms plus triggers is the concept that says if you have a good top or bottom and then all of the trigger lines roll into the momentum phase, look on the large triggers, you're going to have a trend trade. So it's saying if an area reverses the market and gives you momentum, we're going to look for a trade. And the momentum phase of the small triggers is the only time you'll do a trend trade. To review that look from the trigger line video, we'll look at the picture from earlier. The triggers must be wide and the price bars must be above or below. Guys, this is the best look for the high probability trend trade. So rule number 2 says don't trade into the termination conditions, and it guarantees that you have room to the target. So you're going to look at the bottom of the bar and make sure that it hasn't reached an area. And if it hasn't, you've got room to the target. And this is one of the ones that we put together for you guys. Price gets close to the area, right? We took the momentum, and now we're adding the path. We're 4 ticks from a divergence high. But we are going to buy a pullback, which means, whoops, that $50, okay, I'm getting this, to the pink line is actually $250 from the pullback to the area inside of favorable large triggers. So when we discuss termination conditions, the most current bar has to reach the area. That's the catalyst for creating a termination. And if it hasn't reached the area yet, well, by buying the pullback, we now have room to reach that next area. So it's the same picture from earlier. With momentum, everything says down. We're going to sell a pullback to resistance inside of favorable large triggers, and we're going to look for that momentum to carry us to the next area. The small chart, and here's the refinement process for you guys. If you look at one bar on the small chart, all of the bars here, all of these up bars happen within the large chart. It's this refinement process that allows us to reduce risk. So the small chart will have a lot of up bars during the pullback, allowing us to get to the proper area for entry. Our objective is to sell high, and the room to the targets is increased by selling high. So when you jump in before the retracement, you reduce the distance to your target. When you jump in before the retracement, you increase the risk. And remember, it's strong, pull back, go. So when we piece it together, here's your look, guys. Small triggers outside of the large is the strongest look possible. Rule number 1 is met. So I'm going to ask, because we're going through this and I know that I'm not as smooth as I usually am, is everybody comfortable? Odds favorable momentum leads the way, guys. Momentum is everything that we do. Momentum has you in a position to win more than you lose. Momentum breaks areas. Momentum creates momentum trades, HVA trades. It creates trend trades. Guys, momentum, you should be married to it and buying it flowers every other day. Momentum phase on the large triggers is a must for the trend trade. Let the bars be outside of the large triggers. So when you have this look and the top of the bar hasn't reached an area yet, we are going to define our entry. And on the smaller, faster chart, it's an area inside a favorable large trigger. So as the market pulls down, we patiently wait for the midband. What we've done is we've created a window of opportunity. We've identified where the market is most likely to continue. And your limit order goes at the top of the window because the momentum is the strongest, because the path is clear. Guys, this entry is your high probability trend trade. This is a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. This is your first trade as a brand new user, not because it's the only trade that you can take, but this is the trade that taught you to identify momentum. This is the trade that teaches you to understand termination conditions. And this is the trade that gets you in at the best spot to get you to that termination condition with weak triggers. And guys, that's your exit right up at the top. So once you get your entry, and guys, notice that when you circle it, it's the tail on the large chart. We don't trade the tail, we trade the pullback. But this look becomes important for understanding how to go back and study it. And we're going to do a lot of that today before the classroom is over. Um, but your initial stops, if you understand where the market is likely to continue, and I apologize if I'm hurting anybody's head with the back and forth. We've defined where the market is most likely to continue. And guys, this takes a little bit of practice. Let's go see if we can find an example just for grins, right? In the momentum phase, odds favorable, everything up, we haven't reached resistance. If I circle that tail, do you see how the market pulled right back to a mid-band inside of favorable large triggers? And guys, this is the key right here. That's your entry. Do you guys want to go through the entry together? Do you want to walk through it once? I think this is a good idea, guys. So let's do this. On the large chart, the background is green. I know the market's going up, right? And then I'm looking for momentum. I'm in the momentum phase. Smalls are outside of the large. The bars are outside of the large triggers. Everything says up. So rule number one is met. I have strong triggers. Can you give me a Y in the room if you recognize the strong trigger look? Because this sets the tone for everything. And guys, strong triggers is universal. You'll notice that I have the exact same look on my small chart. The top of the bar has not reached Fibonacci resistance, and that means that I have a clear path. It means that there's nothing between me and this red fib, so I've got room to make money. So rules 1 and 2 are met on the large chart, and guys, that's the key. I have momentum, and I also have a clear path. I have room to my target. Once I have that, I turn to the smaller chart. Rule number 3 says that I'm going to buy or sell a pullback at an area inside of favorable large triggers. Guys, get used to writing that on your chart. I'm going to buy or sell a pullback at an area inside of favorable large triggers, which means that I need a pullback, which means on the smaller, faster chart, I need a reversal bar. And there it is. It's just a red bar after all of those green bars. So the rules are met. The momentum is the strongest, right? The path is clear, the trend is up, and now I get a reversal bar. At the time of the reversal bar, my rules say that I'm looking for an area inside of favorable large triggers. Guys, this is favorable large triggers. This is large and synthetic, one on top of the other, trending fast in the direction of the market. I'm also in the momentum phase. Do you see that? We are confirming the momentum on the large chart with the momentum on the small chart. But trades don't come from the triggers, guys, because if you get in at the top of the triggers, there's nothing to bounce off of. There's no areas to ricochet. There's nothing to make this market go back up. So what we do is we look for the areas inside. We look for fibs, mid bands, and yellow 1-to-1s. And this becomes your window of opportunity, guys. And this yellow box represents the point where the market is most likely to continue in the direction of the trend, where the market is most likely to continue with all of that momentum, with that clear path. You're going to right click and you're going to activate a limit order right at the top of that window. So far, so good, everybody? And if the market comes back, notice how my mid-band went up. I can move that up a tick. If the market comes back to my limit order, I'm in a long trade. I'm in a long trade with momentum. I'm in a long trade with a clear path. And I'm in a long trade having waited for the pullback to the area inside of favorable large triggers. And if I know where the market is likely to continue, and guys, this is part of the magic. This allows you to manage your risk before you ever manage profits. If I know where the market is most likely to continue, well, then here about 4 or 5 ticks below, I'm going to put a protective stop. And I'm going to put this where the market shouldn't go. The market shouldn't go below these areas because everything says it's likely to go up. And if it does, I don't want to be in the trade anymore. And look what happens right off the key area, right at the top of the window. I get a reversal bar that's going with momentum. Oh, no problem. Sorry about that, Chef. Here, let me see if I can turn my mixer down. I do this just to mess with you guys. It's fun. Sounds. Hold on. I'm going to fix this so I don't give you guys heart attacks. All right. I turned NinjaTrader volume all the way down. But look how it bounces right off the area, right? So the market comes back, it hits it, it's inside of favorable large triggers, it's an area of support. Guys, this is your long trade. This is the trade that has the advantage of momentum because of strong triggers, the advantage of a clear path, the advantage of an entry area. If your entry is at 50.21, it continues. Well, and I think that was Fibonacci resistance up there at 27. But we're identifying the best of the best. The rules are still met on this pullback to support inside of favorable large triggers. If you missed this one, congratulations, it gave you a second chance. And then it begins to slow down because it's a holiday. But your job is to identify this point, guys. And I want you to see where this yellow box ends up on the large chart, right where the market continued. I'm struggling here. I'll just bring it across. Do you notice how it lined up with the tail? So Arturo, this is key for you. For you guys that are looking for the high probability trend trades, that pullback to support inside of favorable large triggers lined up directly with the bottom of the tail. What we did is we pinpointed when the rules were met exactly where it's likely to continue. And guys, if you give yourself 30 days to focus on this, and I know that feels like forever, then you're going to branch out to the whole next level. So if we go back, that's momentum phase, strong triggers. There's nothing in the way, and that's a tiny little pullback. This may not fit the rules, but you'll notice that there was a fight on the smaller chart, and we'll see what it looks like if I go back to that circle. Just below the mid-band, inside of favorable large triggers. Guys, this is your rules. This is the best of the best. That termination condition still hasn't broken. With the momentum phase, once again, if I circle a tail, where does it line up? Well, it goes just below the mid-band inside of favorable large triggers. The patterns repeat themselves. The previous tail, right to support, right inside of triggers. No worries, J. Roth. Have a great day, man. Enjoy the holiday. And now we're in the weakening phase. Guys, do you see it? The momentum phase is over. The triggers are weak. And we are directly into yellow one-to-ones. And we're witnessing this bounce right now. Rule number 2 isn't met. So guys, that's all you're going to do is you're going to let the rules be met, momentum in a clear path, and then let's just identify that pullback. And by selling high, it allows us to minimize risk. And by buying low, it allows us to minimize risk. And when you identify risk, I love this, the exiting no matter what. For now, these are the patterns that will make you exit your position. Wait for a new signal before entering. Guys, if you get into the market and your stop gets hit, get the hell out of the market. That's it. Keep it that simple in the beginning. If you get a second higher or lower divergence, depending on the direction of your trade, exit. You can always re-enter, right? But we're going to use these divergences to exit the less than perfect trades. And then I love this one. Most of the time, this happens 75% of the time. For you Ron Burgundy fans, 60% of the time, this happens every time. Guys, this is a pattern when it's a second lower divergence that is a little early warning that things may not be going as well as you would hope. This is very, very powerful when you don't have a clear path, when only your small triggers have broken through an area. So for you guys that hold on for dear life on those 50-50 trades, there's your life jacket. If you have a higher divergence, notice that the synthetics are not through the areas. This is a 50-50 trade. That second higher divergence is an absolute killer. Exiting at 1-to-1. So guys, this talks about the management as well. We talked very much about the entries, getting it at the right spot. When you do it, this PDF gives you a lot of great examples of how to manage it. Exiting at key areas, guys, because key areas can create a bounce. Exiting at prior divergence lines, because these can create bounces, and you can always add it back on. So guys, I really want you, especially you more experienced people in the room, I want you to go back and I want you watching and seeing and recognizing patterns and start managing. 90% of the time, everything we do is 100% legal. I like it. I watched a movie last night with my brother, something Bloom, Molly Bloom, about a poker room thing. And her lawyer was like, all right, don't do anything illegal or don't break the law while you're breaking the law. She goes, am I breaking the law? He goes, that's a gray area, but don't do anything illegal while you're breaking the law. Same thing. Divergences that are trending higher or lower. Notice how the divergences are lower. These aren't killers. It's that higher. And then, guys, that's the high probability trend trade. That's the first thing that we look for every day. This market is doing absolutely nothing. It's a holiday, guys. Today's not a trading day. Today is a walking on the beach, hugging your wife, high-fiving your dog, and having a good time. But the lessons are consistent. So let's take some of our pictures, guys. Can we get a commitment from y'all that are learning? I want you to see how much information there can be in one picture. And if you take if you take the time to take these pictures, if you go through every day, true story, and you take pictures, that wasn't my Snagit. Hold on. This is the NASDAQ, guys, and this is quite a bit of time. Here's your new study tool. Every time you see momentum phase, strong triggers, your job is to go back and circle a tail. If you see the momentum phase with strong triggers, circle a tail. Is everybody comfortable with that? Why are we doing this? Because the tails represent the pullback on the smaller, faster chart. So as you learn the software, this is a great way to do it. I want you to annotate the picture. When the market is in a momentum phase on the large triggers, bars outside, this is the best look for a trend trade. We won't even call it high probability. Your car developed a rust spot. Oh, it took me a second. Yeah, it's like watching paint dry today. So guys, does this make sense to everybody? Oh no, Rob, we don't trade tails. We don't trade tails. We trade pullbacks on smaller, faster charts, brother. Remember the other day when you said that that rings in your head all night? Area inside of favorable large triggers? Guys, that's how you reduce risk. But this is your look. You got to get good at the look on the large chart so you know to look at the small chart. What else do we see on the large chart here? How many great examples of termination conditions do we have? Price reaches one-to-ones, the triggers don't break. It saves you from a loss. Price reaches support with weak triggers. Saves you from a loss. Price reaches resistance. Weak triggers. Saves you from a loss. Strong triggers break the areas. Support and no triggers break. Saves you. Saves you. Saves you. So we're developing trust, right? And all we're doing is we're creating recognition, guys. There's a termination, and now we're in the momentum phase on the small triggers. Does everybody see it? Price bars are outside of the small triggers, which means if we pull back to this area, guys, this can be our first shot at a potential short. Termination, small triggers roll, they're in the momentum phase. Price pulls back right to an area right inside of the large triggers, and I know where the market shouldn't go if this one's going to win. Guys, this is how you use that momentum phase concept as the first shot of getting into the market. Does that make sense, everybody? A divergence low represents a trouble spot. It's not a high probability trend trade, but it revolves around the momentum phase. It revolves around the termination. It revolves around a pullback to an area inside of triggers. And guys, this is going to give you opportunities beyond what you're accustomed having opportunities for. But, and I got ahead of myself, none of my triggers are through this area, right? So it's a lower probability. I still like the trade. And there's that S&P, and they're still struggling to get through it. So guys, that's really the PDF. Let's see what else we have in the PDF. We'll go through it. We're going to shut down in about 15-20 minutes probably. So the next trade, right? I typically say, guys, nothing but high probability trend trades. Well, we're going to talk about the next trades, guys, the HVA trades, the momentum trades. And this introduces a third chart, a range chart, and it's going to look different. Um, but the rules are still derivative of the high probability trend trade. And the rules 1 and 2 for the T3 market flow high volume area trades, guys, it requires a working knowledge of termination conditions. Review the guide, right? Where does the guide take you? Straight back to tops and bottoms. Did I lose my picture? I'm not sure how I just did that. Back, back. There it is. We're going to the next level, guys. There we go. So in order to take the next trades, the high volume area trades, the momentum trades, guys, you got to get good at tops and bottoms, termination conditions. And before you get into an HVA trade, not every top or bottom happens at fibs. Guys, this is a new concept for you, and there's a great look. Divergence followed by the momentum phase, and I think we just saw that on the NASDAQ, right? Divergence followed by the momentum phase. If this comes from nowhere, we're going to look short. If the divergence prints, and this one's from an area, and we're in the momentum phase, we're going to look for short trades. You're going to look for short trades. I might be on the golf course. Weak triggers, divergence, momentum phase. Weak triggers, divergence, momentum phase. This can set up something in the next direction. So the HVA trade is simple, guys. When you have the conditions met, whether it's a termination from an area or weak triggers with divergence, you're going to see that pull back to the small triggers very often, like we just saw in the NASDAQ. And if it lines up with an HVA trade on a smaller, faster chart, well, then that sets you up for the trade. And I'm going to show you divergence, momentum phase, and then guys, we were late to the party. There's a pullback to an HVA line. This was your short at 17,800, taking advantage of this look. And from 800, it went all the way down, and you got your $200 on your first contract, and now you're trying to figure it out. Um, a lot of you love to take that first trade off the top. This gives you a little bit of patience, looking for the best area to enter, keeping you patient, letting the triggers roll. This is a great addition to any trading plan, guys. This looks exactly like what just happened. I love this. Divergence, weak triggers, add a fib, gets the momentum phase, and look where it goes. Right to that. Guys, look at this picture. This was taken from last week, I think. It's the same look, 100%. So what we're doing is we're developing recognition through patterns. Pretty cool, right? This will be your next trade, guys. You're going to get yourself into a position where you start taking these HVA trades because of your working knowledge of momentum, because of your working knowledge of termination conditions. You're going to be able to capitalize and manage out of these trades when it's appropriate. And then we're going to go into the momentum trade. Cab, this is your bread and butter. Once again, good top or bottom, reversals and breakouts at Fibonacci are preferable. And we don't want the T3 trigger lines getting beyond the Fibonacci areas, tops or bottoms. When you can define a strong termination on all your charts, it's most preferable look. Making sure you have room to the target, the same lessons from the high probability. And then entering at the area, guys. Small chart. Pinpointing the area involves looking for a specific indicator such as fibs, midbands, one-to-ones, when the small triggers are at or beyond these areas for entry. And all it does is it takes advantage of momentum. When the momentum is strongest, everything's in the momentum phase, a little pullback to an area, and off you go. And you're going to use that momentum chart, that 8-3 chart, to gauge the momentum as well. The area breaks, it pulls back, odds favorable momentum, and down it goes, guys. And that's really going to be an outstanding trade for each and every one of you when you get to that point. Strong triggers, area breaks, pulls back, down it goes. Momentum is confirmed on the market flow chart, guys, and that's all we're using it is to confirm momentum. And John has these pictures 1,000 times. And then ultimately, you'll be able to use the momentum on the small chart to help you manage for larger moves. And we'll get into that when the market's actually moving. And guys, that's the new PDF. For those of you that have been in my class a lot, does it make sense? Does it flow? I know I didn't flow because it's my first day. But the idea is that everything revolves around momentum. Everything revolves around a market that's likely to continue in the direction of the trade. Everything revolves around a market that's pushing as hard as that market can push so that you can just go with the market. Um, and then from that basic understanding, right, from that understanding of those strong triggers, all we do is we add to it and we say, hey, well, with that much strength, I still believe in Fibonacci. So let me make sure that I'm not in an area that may stop the market. I'm not in an area that may reverse the market. I'm not in an area that may create a big ugly bounce. And I'm going to show you guys the whole life cycle of that momentum. Strong triggers, momentum phase. Oh man, it's okay. I'm just, I'm a creature of habit, Rob. I really am. I am slow to change. So this is new for me. This will be 100% smooth within a week, but for now, I'm just trying to figure out how to make it flow so that you guys understand it the best. But I think this is probably one of the best pictures, and I'm not sure why it didn't make its way into the user guide. Odds favorable momentum, right? For short trades is best, guys. This is your best of the best. Look, notice that the bars are outside. As they begin to work inside, both triggers down, one of the small triggers works its way inside of the large trigger. This is the first sign that momentum is slowing, guys, and this is where you start to lose that advantage of momentum, where you no longer have a market that's not pushing as hard as you want it to push. And then when both triggers are still down, but the small triggers are inside, guys, this is that weakening of the triggers. So this picture is freaking amazing for the life cycle of momentum, going from the absolute strongest to the weakest. And when they're weak, anything can happen up or down, guys. And you're going to hear it in class all the time. In short trades, you can still take them, but that entry chart better be perfect, right? That path better be clear, because when weak triggers gets to an area, the market may stop. I'm a big fan of this picture, guys, and this is exactly what we're looking for. This is your best entry. This is still a good one, but not the best entry. And this is potentially a good entry. But when you get these weaker triggers, you start getting deeper pushes, and you see it a lot. And I think I've got the same. Let me open up this one. And I'm just babbling. I'm just getting us through the next 20, 30 minutes, right? There's that momentum phase, and we're looking for the long, but then it reaches the area. There's that termination condition. And the market may still reverse at Fibonacci areas, even when they're both wide up. So this is a great one for terminations. And this is where that trigger line location reading has a lot to do with understanding when it's okay to take that next long and when we have to hit the brakes. And remember that we said strong triggers break areas, and we've all seen it, right? That strength smashing through fibs. Um, For this area to have the potential to break, both small triggers must be at least 2 points, right? At least 8 or 9 ticks on the S&P, maybe 14 to 20 ticks on crude. They've got to smash through that area. That's when these triggers have the potential to break the area, when that momentum in its best phase has the best chance of doing it. And if those small triggers never smash through the area, well, then the market may reverse. And then this just kind of shows how off of that termination, when those small triggers roll and get into that momentum phase, guys, you're going to learn how to capitalize on that look, because you're going to be speaking to yourself in terms of, this is the momentum phase on the small triggers. I can look for that pullback maybe to the large triggers in an area. And then once you get into the actual, well, now we look for the best of the best. We look for that trade. So there's a couple great pictures on termination conditions, really giving you the best of the best. And then straight from the spreadsheet, guys, I think this one is worth studying. Let me go back to the client trades. Just the entry sequence, reminding yourself what it is that you're looking for. And it all starts with the large chart. It all starts with momentum on the large chart. It all starts with that momentum phase, the best of the best, the small outside of the large. And when we have this, remember, we're not trading tails on the large chart. We're looking to the small chart for a reversal bar to start pushing us back. And we're going to buy low, because buying low is the best chance of success. And we're going to do it at areas inside of favorable large triggers. And guys, if that market gets back to our areas, we're going to take that trade. We're going to take that trade right at the top, the best of the best. And in a short trade, the large chart leads the way. The large chart says down. The large chart says strength. Everything says it's likely to continue down. Not looking for a tail. We're looking for a pullback right at the area, right inside of favorable large triggers. And guys, this is where the tail happens. This is where the tail on the large chart looks just like a pullback to support on the small chart. So that's your study. That's how you're going to develop trust. And guys, I want you working your butts off to prove me wrong. And look at that. Momentum phase, back to areas right at the large triggers, and it's continuing down. This was your HVA trade. This is taking advantage of the momentum phase. Bars outside of the small triggers. And then the next trade will be when these roll and we find ourselves looking for a high probability trend trade. Pretty cool, right? Still waiting, weak triggers, at resistance, absolutely no reason to go long. So, guys, what do you want to talk about? We've got a couple minutes here. I want you guys, if you don't mind, go through this PDF file, take a look at it, tear it apart. Let me know if there's something you think needs to change, right? But the basis of everything is momentum, and I want you guys to write that down on a piece of paper in front of you. Momentum leads the way. Without momentum, I shouldn't be looking for a trade. It's really that simple. Every trade that I teach is a momentum trade. And when that momentum goes away, so should the trade. Every trade that I teach has a clear path. Make sure that you're not trading into areas, but rather trading from areas. So if you don't have a clear path, well, then you don't have a trade. And then if it's the trend trade comes from areas inside of favorable large triggers. And if it's the momentum trade lets the area break and pull back to it. And if it's an HVA trade, it's going to happen down here closer to the termination when you get one of those high volume area trades. And guys, this is your plan in one PDF. Learn the high probability trend trades so that you can understand the advantages. Your job, if you don't understand momentum, is to raise your hand and ask me, hey, Mark, let's talk about momentum. And if you're struggling with termination conditions, guys, the best thing you can do is go back and take pictures of them and write the language down. Price reached the area, the triggers haven't gotten through it, therefore, I'm going to wait and see what the reaction is, right? I'm going to get to the other side of the fight. Someone wrote that in the room the other day. Mark says, get to the other side of the fight. And I absolutely love that phrase. Because what does that mean? That means that the small triggers have broken through in the momentum phase, right? Let it get to the other side of the fight. Let it get to the other side of where decisions are being made, then pull back to it. This is your easiest trade right there. And we'll see if there was an opportunity at the momentum phase off the bottom, just for grins. There was your bottom, 3 divergences. And we're in the momentum phase, and there was nothing to do. There is one momentum trade that preceded the reversal. So you guys that are momentum traders, small triggers break the area, price breaks the area, pulls right back to it. In the momentum phase on the large chart, opportunity to cruise up. Look how long you had to wait for that one, though. You were chomping at the bit down here. Hey, Cav, take care, man. But a little bit of patience, waiting for those momentum phases, guys, is going to set you up for success more often than it does not. Termination, weak triggers, momentum phase pushes all the way to support in the midband, guys. That's target reached. Wait for the next trade. Wait for the clear path. We're in the momentum phase now on the large triggers, but the small triggers have to get below the area for us to look for opportunities. Hey, Sergio, how you doing, man? So, guys, how'd we do today? It'll get better every day, and today's going to be a short day. So now I'm going to push back on you. What do you guys want to talk about? We're going to have one of those days where it is going to be a short day, but I want to make sure that if you have a question, let's talk about it. Let's go find examples of it, right? Open up the large chart and scroll back and look at how many times, even if we don't talk about the clear path, how many times do those tails with momentum continue in the direction? What an amazing basis for a trading plan. Momentum, 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 and off it goes. Even if I don't worry about the clear path, and I'm just building trust and momentum, there it goes again. I believe it is, Dwight. All the people that move it are out on their yachts today. Momentum phase on the small triggers, guys. There's your pullback, and down it goes. Momentum phase, there's a pullback, down it goes. Momentum phase, there's a pullback, up it goes, down it goes, down it goes. Guys, all we're doing is developing trust. So today, when there's not a lot going on, guys, this is the way to do it. Scroll back, circle tails, develop trust and momentum. And then when you've circled all those tails, you know, Maybe you say to yourself, well, I'm not going to trade into the area. That's probably not my trade. The small triggers broke through. I'll see what it looks like. The small triggers broke through. I'll see what it looks like. And if you scroll back on this chart, let's see what those tails look like. Let's see. Boy, I went way back there, didn't I? That can't be right. Give you guys seizures. I apologize. Pull back to a mid band. Pull back to support. Pull back to support. So it just keeps happening. Just keeps happening. Debbie, have a good one. Guys, 21 people in the room. 20 people in the room. Dwight, anything you want to talk about? Vittorio, Collie, Jim, Surgeon, Joel, Lyle, Morpheus, Chef, Hypoxic, Donna, Sergio, Arturo, CE Dub, C Dub, Angel, GWC, Rob S, Haji, Donovan, John P. I know, guys. There's a lot. There's not a lot of opportunity to go back and look at stuff. Not a lot of opportunity for historical. So what I do on days like today, what I do on the weekend when there's nothing going on, guys, is I go back and I do that market replay. And today would be a great day to do that. To go back, to do market replay, take a day from last week, go through, and really just focus on your rules. One thing that was in this PDF that I didn't show you that I want to show you is right on. I like it, but you got to go practice it too. So one of the things at the bottom, guys, is there's a little bit about daily goals, and this is a big one. Daily goal is $800 per contract. This is my brother's daily goal. Mine's only 250. Keep trading. Daily max loss limits. You have to have it in there, right? Here's a checklist for the trend trade. Here's a checklist for the HVA trade. Here's a checklist for the momentum trade. So what you can do is you can go back to market replay. And guys, he left this on that last page on purpose. Print the last page. Go do market replay. And from market replay, every time you think your rules are met, hit pause. And go through that checklist and make sure that you are in fact taking the trades that you should be taking. And what you're going to find is the amazing potential of following a plan. You're going to find that this is a trade that wins more than it loses. You're going to be able to develop confidence in all of the pictures that you have when the market isn't moving. Put this over here. All of these pictures when the market isn't moving, right? When you have odds favorable momentum and a clear path and you see that perfect entry, guys, what this does for you is it slows the market down when it's live. It slows the market down real time because it's not, do I have momentum? You're going to look at your large chart and in a second's notice, you're going to understand that you do have momentum. And you're not going to have to think through the termination conditions because you've gone through and looked at so many pictures of termination conditions. Hypoxic, have a good one, man. Right? That you can come through, whoops, and you're not going through the recipe, you're only identifying the look. That's a dead link. Dagnabbit. That is a termination. So the idea is if you take more pictures, if you see things when they're standing still, guys, in the moment you recognize them faster. And the faster you recognize things, the slower the market appears to move. And NASDAQ is creeping. For NASDAQ to only move this much in an hour is unheard of. So the volume is low. Terminations for the win. That's it. Guys, anything else you want to talk about, or should we shut this thing down? Go hit some golf balls. Holiday trading is not easy trading. Holiday trading is where you try to make something happen when it's not happening. And I just can't seem to find any advantages right now. Everybody good with that? It looks like everybody's already jumped ship. 19 is a low number for class. Before we call it, Arturo, is there anything I can go and expand on for you? Morpheus, anything I can expand on for you? Chef, anything? Crude is slow as well? Yeah. Guys, it's a holiday, right? There's a reason there's not as much traffic. These guys didn't go. Awesome, Arturo. I love to hear that. Arturo, are you comfortable taking pictures? Can we do that? And this is really anybody. One of the things you guys get when you download the software is TechSmith Capture. So if you go through and you take that link to TechSmith Capture, um, it gives you that little bad boy right there. You're going to work on replay. So Rob, take pictures. Use the pause button. When you click capture, guys, to get the best picture for me, left click in the upper left-hand corner and drag it all the way to the bottom right. Make sure when you release, you hit the camera, not the video, and it gives you the image preview. And guys, use the arrows. That's a termination. That's a termination. Use the shapes. That's a termination, right? And the most important thing is to use the call out button. Click and drag to make the box. And tell me what you see and why you see it and what you're doing and why you think that's what you should be doing. And talk about your chart reads and we'll work on it together. And then just copy that picture down here in the bottom right, drop it in the room, and you just won yourself a free private session with me here in the room. So practice that a couple times, get good at it. Make sure that you're comfortable with that process because this is how we have conversations. This is how you get feedback. And honestly, this is the most important part of getting you where you need to be to make sure that you can read the indicators. And while I like to give you a fish, I also want to make sure that I teach you to fish. So here's the link to the screen capture as well. It's a great tool. Awesome, Arturo. Your positivity is awesome. I want to just say that. You just have this air about you. I like it. I like it. I like it. All right, guys, we're going to call it 10:30. Termination conditions holding. Everybody's dropping like flies. So what do you say tomorrow we meet up at 9 a.m. We do it again. We'll go through the PDF again. I may steal pictures from it today so that I can go through the pictures without having to scroll so I don't affect you guys so much with that. If you have any feedback, send me a message. If there was an area that wasn't clear, if there was something going on that you're like, man, I think that he should talk longer on that. I think he should talk shorter on that. Guys, I really do. I appreciate the feedback if you ever give it to me, and I'll use it. So go enjoy your holiday, guys. Go run around, have an awesome day, smile lots, do some market replay, bring me pictures to class tomorrow. And tomorrow it will be full tilt boogie business as usual. I'll see you guys in the morning. Take care, everybody.